As I shared in the daily financial news this morning from May 8th, I saw a video from George Gammett, who correctly pointed out something that I have missed, and that is the sheer fact that the oil market, perhaps the most important commodity on the planet, a worldwide commodity, no doubt, something that is in everything, is screaming recession, or at least that is my belief. There's a lot of things going on in the oil market that shouldn't have caused prices to drop 10 or 15% in a month. So I wanted to bring on a 10-year Wall Street veteran, somebody who's looked at this stuff a lot more frequently than I have, and ask him what the hell is going on. And that's Taylor from Life Goal Investments. How you doing, buddy?
I'm doing great. Yeah, to your point, it's scary when the controller of oil, being OPEC, can't control the free fall that's experiencing. So yeah, I mean, you look back, they OPEC stepped into the market and said, "Hey, oil's coming down. We're going to cut production, keep prices propped up under it," which they do every single time. And you had a little rally in oil for a short term there, and then it has just cratered on the other side. And to your point, this is no doubt a recessionary sign. This is saying, hey, we aren't going to ship as many goods. We aren't going to travel as much. We aren't going to use as much gas at the pump, diesel to get goods to people, etc. This is a recessionary warning, and it's saying the opposite that the stock market is, because the stock market's up 8% this year. So it's interesting.
Yeah, I mean, when I think about the oil market, again, casual observer, OPEC cut, they've announced those in the past and not actually executed. I mean, historically speaking, that's not
Yep, fair.
uncommon. I think more recently they've done a better job of keeping everybody together when a cut is announced, but I'm sure they're not perfect. I do know that OPEC has another meeting in a couple of weeks, and if prices are down, it wouldn't be crazy for me to see a headline: OPEC cuts again. I think their economies need oil at some number, I would think.
Yeah, absolutely. No doubt about it. And it's interesting. It's not just oil that's in this free fall type motion. It is commodities at large, commodities X precious metals, right? So your
X
silver,
gold.
yeah, silver and gold, exactly. So silver and gold are the fear trade that people run to in tough times. And so they're both trading darn near. Gold is almost at its all-time high right now. But if you look at lumber, you look at copper, you look at some of the more industrialized materials that are used for building goods and services, or not services, but goods, they are falling off a map. And one of the things that's really a very strong historic indicator of a recession to come is the copper to gold ratio. And so what you've seen is this massive divergence in the price of copper coming down and gold going up. Again, copper actually has tangible use in industry and gold does not. It's just strictly a fear trade. And so as copper comes down, that's a recessionary sign, and gold going up is equally a recessionary sign. And you're seeing it play out in spades right now.
Yeah, but I want to go back to oil for a little bit, because again, this
Yep.
is not some little market. This is not some area where Wall Street could be blind and missed it. Everybody on Wall Street is seeing oil. What is oil down in the last 30 days? Like 10%, 12%, something like that?
Yeah, when OPEC cut, I just looked prior to this, it was at 83. It peaked up at 83. Now it's at 73. So it's down, 13%, somewhere in that ballpark. That's a big move in a very, very short period of time, about a month. And if you broaden out the scale even further to look back over the last year, it peaked around 122, and now it's sitting at $73 a barrel. So you've been almost cut in half over the last year. And it's funny, you're not seeing all the posts on social media about high gas prices anymore. And now, granted, they still aren't down where they were, right? So, the old analogy is, gas prices at the pump go up very slowly, or they go up, what is it? They go up like a rocket and they fall like a feather. And so
Right.
that's what we're experiencing now. You had them shoot up because the gas price at the pump, they're not going to take it. The store is not going to take that profit margin cut. But on the other end, they wait for a while to have them settle back in.
Yeah, but again, it's not a small market. It's not an invisible market. It's not like there are some trades on Wall Street that like 5% of the community looks at. Oil
Yep.
is not one of those, is my opinion. Everybody knows what's going on in oil. So it's ass backwards. How can oil be screaming recession clearly, but yet people talk about, we're going to avoid a recession, or it just seems so ass backwards. I mean, is it all the Fed's going to cut and going to save us going on, or what?
So there's certainly some of that. There's certainly some AI little magic powder dusted in there as well. I mean, if you look at Microsoft, Facebook, and Amazon, I'm sorry, Microsoft, Facebook, and Google, they each mentioned AI on their earnings call almost 50 times.
Oh, wow.
Microsoft was up 9% the next day. Facebook was up 15% the next day. And Google was mixed, but for some other reasons. But people are hanging on the thread of the prospects of what AI is going to do for efficiencies of these companies. But yeah, when you talk about oil, 70% of the goods in this nation get delivered via tractor trailer.
Right.
That is oil at its finest right there. And what you had seen during the pandemic is a massive surge in diesel prices. And then you had, in gas as well, and gas came back down, but diesel really didn't until recently. And so recently you've seen a massive spill off in the diesel prices, which is really indicative of what's going on from a recessionary standpoint, from an overall economic standpoint. It's funny, Michael. And I've been a bit of a bear now for quite some time. But if you look at earnings with 73% of the S&P having reported already this year for Q1 are down 2.2% year over year. So you're getting a contraction in earnings. You're seeing a slowing in the economy. GDP came in at 1.1%, significantly beneath the 2% estimated. And the Fed says it'll come in at 0.4% for the year. So that's a pretty darn bleak outlook for the remaining 3 quarters. You're seeing gold rollover. You're seeing oil rollover. You're seeing the commodity complex, which is supply demand driven, roll over. And then I think to your point that you just made a minute ago, the market is very excited about the prospects of the Fed cutting rates. And so that is not a foregone conclusion, even to the slightest extent. Recently, we've seen a slight acceleration in inflation data. And that means the Fed can't cut rates. And they've told us vehemently they're going to focus on that one number, which is inflation. So they're telling us they're not going to cut rates. And the market says you're going to see 3 rate cuts, 75 basis points, 0.75% come off of rates this year. And I think what's really interesting is to see historically when the Fed cuts rates and we do go into recession, after the first rate cut, it's an average of 13 months before the market bottoms.
Oh, wow.
So be careful what you wish for. The Fed rate cut is not necessarily the guns ablaze and we're back off to the races. The Fed cuts rates for good reason. They don't cut rates for our health. They don't do that. It is because there is economic weakness being experienced and coming through. And this is the business cycle. The Fed raises rates, gets inflation under control. It forces us into recession, and they cut in recession, and we get back on our merry way on the other end.
Yeah, we're going to do a video discussion about rates, and we'll do another one on inflation because I think those are very important topics this week. But at the end of the day, I think George Gammon was right to call out the oil market. I had not seen it the way he put it together, which I thought was really well done. Full credit to him. But yeah, I can't tell you. I mean, I guess I'm more convinced now at the end of this than I was at the beginning that oil is telling us, frankly, we're in a recession. It's already. I mean, we can't. It's a call that we're in a recession starting this quarter, in my opinion.
And look at the bond market. The bond market is showing a massive inversion, right? And the bond market has predicted with an inversion the last 8 straight recessions. So this is not something that's going to come up and bite us in the butt. And that's the one thing, I guess, on the other side of the coin that makes me a little bit more optimistic than the doom and gloom crash type scenario is all of the money that's on the sidelines. Right? We have record amounts of cash in money, or I guess I should say record amounts of money in money markets. And I think that that the smart money is not going to come back in until they see some compression in stock prices, but it is there. And it's not like this one's going to slap us in the face and we're not going to see it coming. It's right in our face. And so people are prepping for it. Businesses are prepping for it. And therefore, I don't think that it's that massive, massive, absolute gap downwards that we've experienced during some other recessions.
This is going to be kind of, in my opinion, more like the .com, I don't know, crash, whatever you want to call it. It was what, 21 months or 22 months kind of peak. I mean, it was like a death by 1,000 cuts. It wasn't this V-shaped. It was, I don't know.
Yeah, I was looking at the NASDAQ the other day. So 2000, 2001, 2002, I'm going to get the numbers maybe slightly off here, down 40%, down 21%, down 35%, 3 years in a row. And again, don't quote me on those numbers, but that's darn close.
Double digits.
3 really, really bad years back to back to back.
Yeah, it kind of feels to me where we're going, right? This doesn't feel GFC, global financial crisis to me. It doesn't feel it's more problematic which was
Yep.
definitely the dot-com crash. So.
It's a reset. It's a reset, which is needed.
So if you want to follow Taylor from Life Goal Investments, who puts out daily educational content, get the occasional rant, how do they follow you?
Yeah, follow us at Life Goal Investments. We're on both TikTok and on Instagram, so whichever one you prefer there. But we'd love to have you follow along. Thank you, Michael.
Thank you, buddy.